Verizon missing estimates by a penny. Shares of other cable and satellite TV providers have seen their shares fall in the past week after Comcast, the parent of this very network, said it expects more customers to cut the cord this year. Joining us right now to talk about all of it is Craig Moffett. He's the senior analyst and founder of MoffettNathanson. And good morning to you.
Morning.
What's happening here? It feels like there's a step change happening, at least in the way the market is perceiving some of these issues.
Well, look, I think there's a couple of things going on. First, I think it's fair to say that the companies that have diversified are not doing as well. So Comcast and AT&T, which both of whom have diversified pretty dramatically
into
from
content,
their core,
into things like NBC Universal,
into
content
and all that stuff. Everything other than the core business is doing a lot worse than the core business, both at Comcast and at AT&T and at Verizon, by the way, because Verizon's wireline results today, which are kind of off core for them as primarily a wireless company, the wireline results were god awful, and so everybody's. The diversification strategies are not working. That's number one.
So you think, okay, just to put a point on it, you think that investors are saying, just give me a clean story?
Oh, yeah. Not just because the story is cleaner, though, but because those businesses that they've diversified into are just not as good as the businesses they're diversifying away from.
Is that cyclical, or do you think that there's something secular to it?
Oh, it's clearly secular, right? I mean, look at AT&T's portfolio that we saw yesterday. DirecTV, terrible acquisition. The wheels are falling off. Warner Media already starting to look like there's some really problematic parts of that business. Comcast, Sky looks like now a at least troublesome acquisition with no EBITDA growth and obvious secular headwinds, and NBC facing the same kind of secular challenges as Warner Media. So investors have said, look, over the last year, look at how well Charter has done relative to Comcast. The cable business is doing really well, and Charter has been a monster. But Comcast is getting dragged down by the acquisitions they make.
Isn't this a storyline that just switches from time to time as investors come in and out of favor with it?
Well, possibly, but I think these are long-term secular stories, right? Now, you could argue that cable right now is secularly ascendant, and that sometimes changes, and people may start to worry about cable. But the reasons that people are concerned about the traditional media business are not kind of flavor of the month reasons. These are secular challenges.
Let's just break this down. First, you were talking about AT&T, Time Warner. What do you think happens in that instance?
So let me be provocative for a second. I think if you kind of take your crystal ball and look out a little bit, it's hard to see that portfolio staying together for forever. Somebody is going to come into AT&T eventually, and whether it's in 3 years, 5 years, whatever, they're going to have to break that company up. And you could imagine a scenario where someday the pieces of what are now, if you assume that looks like, whether it's a GE or something, and you refocus on a core business, that they refocus on core telecom, that you spin off those assets that have been acquired probably at huge losses. And who's the natural acquirer of, say, Warner Media? Comcast. You could see Comcast breaking up into two pieces and letting NBCU say that makes more sense with Warner Media assets.
Do you think regulators would allow for those types of combinations you just talked about?
Well, it depends. If you depends where that business is in the cycle. There was a time when DirecTV and Dish, for example, regulatorily could never be imagined to be together. Now, you might put them together to save them.
Craig, did you ever believe that these things should be put together? Were you ever a believer?
No, never made any sense.
But the market has richly rewarded the combination. If you look at Comcast over time, and granted that's our parent company, but if you look at where they've been since they bought the assets with NBC Universal.
Well, look, NBC was a very good acquisition as a diversification acquisition. They bought it at a good price, they ran it well, and they bought it in 2009. And pretty much anything you bought in 2009.
Look back at the Comcast stock for the last 10 years, though. I mean,
the acquisition of NBC has worked out really well, but not because strategically it was a great acquisition, because financially it was a great acquisition. If you had bought NBC stock as a standalone thing, it would have done well.
No, I always thought it was robbery when we were able to buy it at the price we were, and then able to actually pick off the rest of it.
But it was also the operations that Comcast put through it. I would argue.
No question. Look, Steve Burke did a great job here,
but less about the synergy between the actual cable assets themselves.
If they were sitting here, they would argue with you about that.
I'm
not sure about that. Yeah, I'm not sure about that either. I think
the core broadband business, I mean, the chart might look like Charter.
Yeah, look, that's right. I mean, if you put Charter against that, Charter has certainly done a lot better than that because the cable business has done a lot better than NBC, and the acquisition of Sky has been a clear drag.
All of these sort of permutations, provocative permutations you're talking about, you said 3 years, 5 years out. You don't think this is something that Elliott Management, for example, in the case of AT&T, is going to force this issue in a more immediate
it's possible, but look, my guess is that nothing really dramatic at AT&T is going to happen until the dividend has to be cut. And to be really clear, they're not in any danger of the dividend being cut right now. And so, but if the reason the stock is selling off is not because, and the dividend yield is therefore rising, is not because the market is saying, oh my God, the dividend's unsustainable. The market is instead saying, okay, I like that dividend.
Well, and AT&T is trading at a premium to Verizon recently.
Yes.
So it has seen some advance in the stock.
Well, it's done better than Verizon over the last year, although Verizon outperformed AT&T by about 30 some odd points in 18. AT&T
I'm just saying the downgrade
reversed
today
it
was
in
based
19.
on the idea that there's a premium recently in the stock.
Yes. AT&T, and it's interesting because the irony is Verizon pursued exactly the right strategy by sticking to its knitting in wireless, but they didn't actually do a great job at it because they left themselves exposed by overplaying their hand on millimeter wave spectrum, and now they're in a tough spot.